Well, good morning, Jagendra Rana here. The topic of the day is distribution channels in Indian insurance. Distribution channels in Indian insurance. The Insurance Regulator IRDAI, that is Insurance Regulatory and Development Authority of India, has asked companies to come up with strategies for providing affordable insurance product to achieve the goal of insurance for all by 2047. So the move is significant given that high premiums in health insurance are causing many in the senior age group to drop out because of affordability. Now, the Insurance Council hosted the Insurance for All Vision Meet to lay the groundwork for the vision of insurance for all by 2047. So, a major focus is on defining the insurance for all concept and developing mechanism to measure and monitor progress. So one of the ideas discussed in that meeting was to increase the diversity of providers, means insurance intermediaries, who in turn will bring in a broad range of insurance products, thereby increasing competition and reducing pricing. Another one is widening distribution channels for insurance to make it more accessible, particularly in underserved areas. The company suggested that the use of InsurTech can streamline operations, reduce administrative costs, and improve efficiency. These savings can then be passed on to consumers in the form of lower premiums. The participants said that strengthening the state insurance plan is crucial for making insurance more affordable. Because see, the insurance distribution channel in India are expected to change in the coming years with a shift to self-service facilities and an increase in the use of technology. As far as self-service facilities are concerned, these facilities will be intuitive and user-friendly with a customizable dashboard for customers to manage their policies. They will offer multiple functionalities such as easy payment processing, electronic signatures, and access to knowledge resources. Technology will become key enabler in the insurance distribution channels with cognitive technology strengthening the assisted distribution channels. So analytics solutions such as predictive analytics and behavioral analytics will be used to increase sellers' knowledge and skills. The Insurance Regulatory and Development Authority of India has undertaken various initiatives to boost insurance penetration, including permitting insurers to conduct video-based KYC, launching standardized insurance products, and allowing insurers to offer rewards for the risk behavior. Other trends that are expected to shape the insurance sector in India in 2025 include an increase in popularity of products that can be sold over the counter, means OTC, over the counter products, a manifold growth in the health segment, an increase in the demand for cyber insurance, liability insurance, property insurance, and crop insurance. See, this distribution is a major area in the insurance industry. And the distribution channels are playing their role in different manners. But nowadays, the technology is transforming insurance distribution. Because the role of distribution channels in insurance cannot be overlooked. The ever-changing customer needs, the increasing penetration of the internet, and the growing millennial population are the key factors that decide the different forms that are insurance that the insurance distribution channels have to take. So initially, the insurance device has been used as a risk transfer mechanism. But in the present decade, the insurance device is slowly getting migrated as a risk avoidance techniques. So during all these changes, the distribution channels methods were the predominant factors that contributed majorly to the healthy metrics or ratios for the insurers. Take out distribution as a separate component from the insurance value chain. It has been impacted by various factors such as changing customers' behaviors, ongoing regulatory changes, and also by the demographics to a certain extent. So agency and broker channels being considered as the traditional insurance distribution channels, both of them are still dominant in their market share contribution when compared to the various channels today. So while a myriad number of potential distribution capable channels are growing up every day, the agency broker channel are still dominating with reference to customer retention, product mapping, to customer need, etc. The distribution or the contribution of distribution channels towards insurers' profitability is significant. The efficiency of any given distribution channel would be derived from the healthy insurance business. The channel has a quag for the insurer. Similarly, the profitability of the insurer would be directly proportional to the healthy insurance business acquired by any given insurance distribution channel. So the customers of insurance sectors were provided with very limited options, such as directly visiting to the insurer's office and or agency broker channel during the early decades. But over the period of time, with the increased velocity of technological improvements on each business day, the insurers are exploring the new ways and possibilities to reach out to the customers. This has resulted in huge increase in the number of distribution channels. So with the overwhelming technological exploratory choices, insurers have started designing personalized distribution models that can target specific customer segments. These distribution models are based on multiple digital technologies and innovations. So when the insurers have increased the exploratory possibilities on all these newly emerging distribution channels or models, the need for cost optimization also arises accordingly. So on a high level, cost optimized and efficient channels are shaping the feature of insurance distribution component. The trend of cost optimization says that the cost to acquire an insurance business has always been on the increasing side. The business acquisition cost with reference to personal lines may look simple and straightforward because it involves few calls and few revised quotations, insurance, etc. However, with reference to the commercial lines of insurance, the business acquisition process involves more steps and processes, thus resulting in increased acquisition cost. So, the following are the multiple processes involved in the commercial lines of insurance business acquisition. Say, for example, single to multiple on premises visit, multiple rounds of risk evaluation as and when required, multiple revised quotation in issuance, multiple premium due collections, multiple additions or deletions of risk element transactions, multiple calls or visit for risk inspection processes. These ongoing processes or ongoing increases of the acquisition costs have made the insurers to think and explore about the cost optimization possibilities. Every business process within the business acquisition has been explored deeper. Now see how technology is transforming insurance distribution channels. The insuring has always been a mundane and complicated subject for businesses. Distribution channels allow customers to access and purchase product efficiently. Online insurance sales for new businesses are fast catching up and are likely to grow at a CAGR of 13% to become a $37 billion break by 2025. So each distribution channel requires different resources to be effective and impact the pricing structure. The type of insurance business model determines the structure, strategy and placement in the market. Take for insurance India. The market size of the online insurance business in India is currently $15 million. But the overall insurance penetration rate is just 3.7%. So the regions where insurance penetration is low poses an immense potential for the digital PM market. Insurers can leverage the following distribution channels to undermine the profound potential. Because self-directed or direct distribution channels can work. Through self-directed or directed distribution channels, insurers can reach out to the customers without selling the commissions for any middleman. With an increase in the population of tech-savvy customers, the ready availability or online channel of advice or transaction capabilities is a need of the hour. So online channels, websites, social media platforms, e-commerce and kiosks are some examples of the direct distribution channels in insurance. So the direct insurance distribution channels encourages self-service and independent decision making. NLP powered chatbots are a great way to provide a self-service portal for buying, renewing insurance policies. Leading insurers like Rally Gears are leveraging the direct distribution channels by integrating chatbots in different platforms like their websites, mobile apps, and on third-party apps like WhatsApp. Secondly, assisted distribution. Agents and brokers are typically the key players in the insurance distribution channels. So with the market share of 42% and 25% respectively, the old school face-to-face distribution channel is very much alive and is integrated with tech-assisted models to ensure more leads and conversations or conversions. So they mainly play a part in the advising and managing complex insurance products. Agents, insurance brokers and reinsurance brokers remains the most recognized insurance purchase channel. The Gartner Group reports that 60% of the US GDP is sold through assisted or indirect channels. Cognitive technology is becoming a key enabler to strengthen the assisted distribution channels So the technologies that are empowering, leveraging, empowering learning for insurers include augmented reality, machine learning, data analysis, and NLP. Then the affinity-based insurance distribution channels are there. Affinity channel focuses on distribution product to a tightly concerned group of consumers with similar interests. Traditionally, the affinity-based distribution channels involve peer-to-peer network, broker and aggregators, while the network model remains the same. The model has become the digital and tech-driven for affinity channels, and technology is playing a vital role in expanding the consumer base. So the key benefits of the affinity distribution channels are common platform for all stakeholders, one-stop access to policy and claims, centralized database for insight analysis. The distribution channel is also a part of the B2B2C or API-based insurance business models. So, in the countries where buying an insurance is not mandatory, market penetration is extremely low for insurers. Being meticulous in sales and marketing efforts and educating consumers about the benefit of insurance is just not sufficient. Convenience is the key to new generation consumers. Therefore, insurers need to invest in technology and make insurance policies accessible to the new age digital consumers through the channels of their choice. Thank you. Thank you very much.